To kick things off, I'm going to ask you a bit of an overall question about the organization. Could you give us a little bit of a higher level view of what Alkaline Fuel Cell Power Corp is about? What is a business? What is a business model? And where are you today in executing upon that?
Great. So things have changed. I appreciate the question. I mean, at the end of the day, we're bringing affordable, renewable, and reliable power to the people. So at high level, that's really what it is. And really, we're developing clean and renewable energy systems, combining that with our clean technology investments in fuel cells. And that is sort of two distinct businesses that we're building today and trying to make it a pretty lucrative investment platform.
So really two business lines. One, an investment platform, if I can put that way, and then two, developing your own technology. So let's maybe zoom in on both of those. Can you tell us a little bit more about starting with your own technology? And yep. I saw some announcements. What are you doing there, and what is the progress made to date?
So, as our name implies, it's the Alkaline Fuel Cell Power. So the start of this business just over a year ago is the development of this alkaline fuel cell. So we have a group, Fuel Cell Power NV, a group that we own 100% of in Belgium, and a few resources in the Czech Republic. And we are developing our own alkaline fuel cell. So we have another, if I work backwards, just under 2 years left to really bring this to market and start developing some revenues from it. What we're building is a 4 kilowatt fuel cell. So from a size perspective, it's certainly more than enough for a home to power a home. So it's a 4 kilowatt capacity fuel cell with about 3.2 kilowatts hour in equivalent thermal output. So it's sort of designed perfectly for a home or a small building. And we are in the process of developing that. And I believe it was May 19th, we put out a release that talked about we achieved the first step, the first key milestone in the development of that fuel cell. And the first one was in our lab configuration, we did the first cell stack. So one cell stack, we lit up the system. So it is operating the electric, the thermal, it is operating today. We can turn it on and off. And that sits in Belgium, and that is operational. So we achieved that first bench test of that technology. The next step is sometime this year, so later this summer, we expect to have this 4 kilowatt in-lab configuration fully done. And that will lead us into next year, where we then look at getting CE, so European certification for it, and start getting some 2 units made and tested next year. So that is the core of this business, of developing that alkaline fuel cell. And why that alkaline fuel cell? It really comes down to, climate change is an issue. And in Europe, far more than North America, Europe has really bet large on the hydrogen economy. And so you have over 15 European countries that have all signed on to eventual conversion of their natural gas systems that would flow to people's homes and their businesses that are being converted over to hydrogen. So green hydrogen will be flowing literally to your burner tip of your boiler in your home, or in this case, your fuel cell. And that's the expectation in the coming years and decade as it rolls over in all these countries. We are gearing up for that. So when that hits and customers have hydrogen coming to their home, our fuel cell will be the most cost-effective, affordable, renewable, and reliable system you can run your energy on in your home. And that's exactly what we're trying to build. So that part of the business, it's exciting. We have money sitting there. We are developing that out. We're excited at the progress, but these markets are different times, Joss. And the market doesn't want to know you're spending all your time and money on a technology that's not fully developed yet. So that kind of takes us to the other side of the business, which is the CHP combined heat power business. So the way I look at it, and I've only started a month ago, is we have this original equipment manufacturer, this OEM side of the business that, let's face it, when that does hit, that's the hockey stick. That's the hockey stick we develop for investors for what we're doing in this marketplace. But in the short term, we need to diversify our investment strategy. We need to have real assets, real revenue, real earnings to really balance this investment package for the market conditions they are today. So the board acquired a CHP business. So we're a developer of energy assets before I started. And I can dive more into that. But that OEM side, the fuel cell side, is a critical piece to where we'll end up. It's a question of what we do on the way there. And there's no straight line. So we're making sure we have the right pieces to get us there.
Yep. So definitely want to come back a bit on both items. So let's talk about the fuel cell first and the work that you're doing over there. I think it's the context is clear. This is a big component in helping to move to enable a climate transition to move to net zero and beyond. I would say Europe, as you said, very focused on it, probably even accelerating with some of the geopolitical developments over there. One trying to move away from gas, and then you see now that as alternative solutions, they're looking back at coal again on a temporary basis, but it means that they need renewable solutions and low climate impact solutions urgently. So there's definitely a big market there. If you look at that market, what is your view on what that market represents? What the size of that market is? What the size of that opportunity is at a high level? And then the second question I had, if you use that technology to your point, for example, to heat your or to supply electricity to your home, what kind of infrastructure do you need to support that? Those would be two interesting items, I think, for people to understand. One on the opportunity, and two on some of the conditions that need to be fulfilled. Besides what you're doing on getting your certification.
It's a great questions, and it's a great discussion, because that's the one. I mean, we know the technology will be, and I can get into all the reasons. Less precious metals, lower heat, why our technology would be the right one when you do have a hydrogen flowing to the pipe and flowing to people's homes. The size of the hydrogen market, I mean, it is quite significant. European Union has decided it is their answer, right? The hydrogen will definitely be their answer. The challenge, and then the market size is quite significant. I think people are talking about 28 billion and beyond. The challenge in hydrogen is to have that, you need, say, green hydrogen. You need to develop that. So there's many moving parts and components. And so you have now Shell, you have everyone looking at getting into, the big oil companies getting into, more of a hydrogen play. And so developing hydrogen, looking at electrolyzers, which convert, say, renewable electricity to hydrogen. You can convert natural gas and other fossil fuels to it, but there's other processes involved and it's not as clean. So there's definitely a global demand to build that supply. And that is starting to ramp up. I think with the speed to which we have to solve climate change, it's just going to have to ramp up, and it is in a tremendous way. So we're cognizant of, we have this we're the OEM of this alkaline fuel cell. We need hydrogen to be flowing for there to be a market for it. And it started. There's a small hub and spoke of hydrogen flowing to a community in the Netherlands. So these things are starting to take shape, but we do need to grow the hydrogen supply. And that's not something we're actively working on, but you have different components. You have people working on the supply of hydrogen in the first place. And that's complicated in and of itself. You have people spending a lot of resources on the actual electrolyzers themselves that allow renewable electricity to be converted into hydrogen. So there's many parts that will play out, and we're really focusing on that last piece, that last mile to the end customer, to make sure we can deliver the most affordable, the most cost-effective, reliable power. And that's the nut we've gone after. So there are a lot of moving pieces, but it's an interesting play. Europe is ahead, and I think a few years ago, Europe went hard on, as an example, it's a hydrogen economy, and every manufacturer, Siemens, everyone are really, pushing hard to convert and be ready for that market. Whereas in North America, they initially took a far more electrification model. Electrification was the answer. Let's electrify everything in homes and buildings, thermal again, and that was more their answer. And this isn't a long enough program to get into this, but if you think of it this way, yes, European infrastructure is far older than, say, North American infrastructure, but Europe has a much bigger advantage in they weren't just electric, everything electrified. They had a lot of district energy, a lot of district steam, district cooling. Those assets grew tremendously over the years, and the use of heat pumps. So thermal energy had its own life. Whereas in North America, we did not see that type of explosion of heat pumps and really anything away from taking your, cooling and electricity from the grid itself. So two very different markets. And one way to look at it, which gets interesting, is Europe being far more sophisticated, of having more diverse loads of thermal, heating, cooling, heat pumps assets connected, in addition to electrification and in addition to electric assets. It's more customized solutions. You have, where's your renewables coming from? So while it's more complicated and they are more advanced, the North American market is more interesting because those thermal efficiencies of building a district energy plant don't really exist. There's a few large ones. So there's a greater opportunity to take almost that delta of what happens when you stick in a fuel cell and you become really efficient in bringing low cost energy to a customer. You have a lot more efficiency gains to sort of take out of the equation and keep either in a return on investment or charge more for the asset. There's two very distinct markets.
Yeah. No, get it. So coming now back to the portfolio, and that will be my last question about the existing state of affairs. Could you tell us a little bit more about what the thesis is of that portfolio, and get a little bit more detail in what you have done so far from an investments perspective there?
Sure. I think it's obvious. I mean, they made the decision before I got here, and I think it's a brilliant decision. They understood investors and the market were looking for a stable investment base. They were looking for assets that are already deployed, that spit out revenue, that have earnings. And like I just described, what's happening in North America, there is a difference. So we could install a CHP, a combined heat power system, to deliver 24 hours, 7 days a week electricity to a condominium not too far from where I'm sitting. And we can deliver a good amount of their baseload power. 24/7, this unit is operating. The fact that we can deliver that for a 20% discount to the customer, so they're paying 20% less than what they would pay if they got it from the electricity grid. And we're making, a more than a 15% levered return on our investment while giving that discount. And the local utility is making less than us and charging more. This is the opportunity in the CHP market. And it's not that where we are in Toronto, Ontario, Canada, that we have the highest electricity costs. We don't. But the fact that we're already in the money, that it's not that difficult to go to customers and to offer, here is a package of, we will put in infrastructure behind your meter on your property, we will operate it, own it, and charge you for the energy we create at a discount to what you're currently paying. It's not a difficult proposition. I would argue, by having this portfolio, in addition to the investor side of de-risking the investment in alkaline fuel cell. So we still have this OEM play with a hockey stick potential as it rolls out, but we now have a solid footing of, cash being deployed in assets, getting the revenue and the earnings from it. That was a solid foundation for investors. From a growth perspective, we are an early mover. Many people have tried to develop a lot of CHP assets and go to customers. I would argue they can't. They don't know how to find the sweet spot of how to make them work. And we can get into that. We have some good ingredients that make our model work better. We take risk better than the next person, and risk is in the eye of the beholder. If we do a better job at managing it, we're going to close more deals. So the portfolio will start to grow. We have about a $50 million Canadian pipeline of projects. One's installed and operating. Another one is signed, contracted, and hopefully will be deployed in the coming weeks and months. And we have many more behind that. So as we look at that portfolio, just that portfolio alone has a potential of about 50 million deployed in the next 2 to 3 years, about 16 million plus in annual revenue, EBITDA of about 6 to 7 million, and net earnings and net income from that. So it's quite exciting, and that's without trying. That's what came with the acquisition. So we're quite confident we're going to grow that side.
No, I think to your earlier point, I think this is an interesting value proposition where you on the one side manage to invest and focus on the technology of tomorrow in a market that we know is very welcoming to those solutions, and then at the same time generating revenue, because it is important, and it's an important element to investors, and I think that gives you a great element of generating comfort with them and showing them how you manage your risk and give them a positive outcome.
Absolutely.
Frank, let's maybe move into to that point. So you say you have a very different approach with those solutions, but which I would like to know more about. But maybe put that in a more generic question and ask you, what makes your organization unique, different? Like I see other organizations doing research in this space. I see other organizations investing in solutions around thermal heat. What makes you unique and what makes you different? What are your key differentiators, in other words?
It's a great question. And again, if I apply the lens of there's two distinct parts of the business. So on the OEM side, I mean, we're in at the right time. An early mover, Bosch, everyone are already coming out with their own fuel cells in the coming year or so. So we're not, we're in the right place, right time. We've raised cash for that business. So as that rolls out and the market's ready, we're quite confident, and more numbers will be coming out sooner than later on what those opportunities are. So, the pure advantage of the alkaline fuel cell compared to others is that while it relies on hydrogen as its input, unlike natural gas or other biofuels, which are becoming more difficult in Europe to do anyways, it's a use of nickel and non-precious metals. Because of alkaline being a lower temperature output in the machine itself, it doesn't require significant infrastructure to support it. So it's just a lower cost for the end consumer to deliver power to them and heating. And again, heating can be turned into cooling. But so there's a number of value propositions on that side, and we're confident when the time comes that will do quite well in the marketplace. On the CHP, on the being a developer and owner operator of power assets, the value proposition, I'll keep it high level, but it's simple. One is, look at it this way: every project you have an equity requirement, and then you have your senior debt on the project. Maybe you can get up to 80% senior debt, non-recourse on that project, and you have to put up your equity. It's not easy. There's a lot of businesses that are in the space who have the resources, the service crews, the teams. They're really trying to get a lot of margin out of it that is warranted. So I think we're nimble. The way that we've set up, we're quite nimble. We outsource pretty much all of it to date. And so we're very nimble to pick the right resources at the right cost at the right time to design, install, operate, and maintain the right equipment. There's some great sophisticated team that we picked up that developed these projects in the first place. And they were very good at really squeezing out some of that margin that could have easily been lost. That's a common problem in the industry. People who try to do this really don't understand where the margin has to sit. The second part is, and we've explained it in our second half year highlights and outlook of what we're looking to do, the use of Canadian flow-through credits. So there's CRC credits from the federal government that allow us to really, again, have an additional, multiple percentage margin compared to others on the cost of our capital to deploy these projects. So we really found a way to be more competitive versus other competitors who are trying to do these projects. And that's a huge difference when you're dealing with condo corporations and other buyers of the power. Another component comes down to we're just better at taking on risk. I think most people, when you're in that type of business, you look at all the risk sensitivities and you can get nervous about certain risks that you need to take. And in our case, the one that we take and we're very proud to take, and because we understand it well, is the cost of natural gas. The price of natural gas is baked into our contracts with our customers. Whereas most other competitors go to those same customers and say, well, here's our price, but you're taking all the risk on the price of natural gas. We're not taking that. We're comfortable in the models. We're comfortable understanding on the macro level where the market's going, and we accept that. And that also makes us quite unique. Many people have been at the finish line of these types of projects and can't close it because of that type of risk. Those are just a few components of what make us pretty unique in closing more deals.
Yeah. And what is your target market there for the moment? And maybe let you answer, and then because it leads me automatically to another question.
So, I will say, and we did get into other things in our second half, outlook. In the current CHP business, it's simple. We're trying to put in pieces of equipment that are going to run 24/7 all day long. And so what you then need is, just as your home, it goes to bed at night when you go to bed. So to put in a system that operates at a much higher level than how your house goes to bed wouldn't be very economic because you don't need the power. So we're trying to, condominium is an interesting example where there's always a certain amount of base load power all throughout the year that's always going to be running 24 hours, 7 days a week. And say it's around a 0.5 megawatt range, give or take. It's a significant infrastructure. That's a $1 to $1.5 million installation, cost of the equipment and installation. And so it's within that base load. So you as a building would use way more than that, but it fluctuates so regularly. We're not trying to chase the peaking and chase those numbers. We want a slow and steady 24 hours, 7 days a week power that you're going to need. So condominiums, multi-residential, an industrial plant could be interesting, but only if they have, say, 3 shifts. If they have 3 shifts and we know they're running all day long, that's an opportunity. A mall, places that have that base load is really what we're chasing. So it's also quite unique.
And geographically, where's the focus there?
Well, at the moment, the assets that we picked up in the pipeline of projects are all sort of in the greater Toronto area for now. But absolutely, we're interested in other targets and acquisitions in this, the bookends of what we've made in investments across the country and beyond.
Which takes me to my next question. I kind of preempted it. So, what's your views going forward? And looking at your business, at your corporation in a holistic way, where do you see it moving into forward from an offerings perspective, from a geography perspective, from an investment perspective? Just name it.
Certainly the CHP business, really the energy assets, the idea or the opportunity to continuously deploy more capital into assets that are earning revenue and earnings every year is a big part of that strategy. Right now, they are, as I just described, in this baseload power system. And, it's right now we're using a combustion natural gas engine to deliver it. We're definitely looking at other technologies and other ways as a developer and owner operator to have even more efficient use of natural gas and more, even our current use of our combustion engines today, as an example, will actually produce in Toronto today, will produce a net environmental benefit compared to the emissions in the grid today. So we know we can do better, and we're continuously looking at new technologies to enhance how we deliver CHP to customers, and there's more to come on that. But even beyond the CHP business, we definitely want to grow that. Let's deploy those $50 million and build that up in the next 2 to 3 years. But from a growth perspective, we're looking at what additional CHP opportunities, what additional acquisitions, ideally of assets that come with revenue and the earnings. But absolutely, it would do us a benefit to find synergistic, contiguous sort of end-to-end businesses that support that. So whether it's servicing CHP assets, servicing customers, it's an interesting bookends of what we're in. And I think there's a lot of contiguous operations, revenue, really opportunities to really scale this business model. And it will come in different shapes and sizes and forms across Canada and could be beyond Canada. I'd love to find some assets and businesses in Europe. So, we do wear the two hats. We're a developer, owner, operator on one hand, and we are this OEM of this amazing fuel cell technology on the other. And everything in between is open. And as long as it meets our requirement of it can generate revenue, has some earnings to support the business, and allows us to, I don't want a mature business today. I'm sure investors don't want to hear that. I want a business that takes advantage of the de-risking of opportunities until it's a mature business. When it's mature, there's no margin left on the table for anyone. And we're trying to take advantage of this shift, this transformation in energy, this transition over to this net zero economy. And on the way, that's a great opportunity for us to be early movers and leaders to generate not only the returns for our investors, but also the benefits for the consumers.
Yep. Yeah, it comes with a very disciplined approach, and I think that that's an important message for everyone to understand. That is that you're very disciplined in looking at the growth, the opportunity.
I mean, to show you how disciplined we are, and that might have been one of your questions, but we're disciplined enough to know, we need to know what it is we don't know. We need to be good at delivering on this. And just the other day, we appointed Carmen Marcello as a former chief executive officer of Hydro One Inc., which is a $20 billion market cap utility in Ontario, $23 billion in assets. So clearly we're doing our best to ensure we're going to look and feel and smell like the type of company can deliver what we're saying we're going to do.
Yeah, no, I think that that is a critical component, and I think bringing someone like that in is definitely a clear message. Frank, I find it fascinating. We already talked for 29 minutes. And,
I can talk way longer than that. That's the problem.
I'm sure, but it was very, very interesting and very fascinating. But there's one last question that I want to bring up, and I'm sure the audience wants to get your take on. Some great achievements to date. Lots of opportunities ahead of us. Like, I'm now looking at the stock. How should I look at that? Like, should I?
In this market, go ahead.
Should I sit back and wait?
Yeah.
Because of the market conditions, because I want to see more execution from your side. Should I? How do I look at this compared to other companies in the space? Should I really analyze it in detail? And we're not here to give any advice to anyone, but how should I look at this, and what should I take into consideration if I am if I'm considering an investment decision?
It's a great question, and it's a great perspective to provide to the investors out there looking at it. One, I would say the current board and team before I got here were quite brilliant to understand where we need to go. And so acquiring the CHP assets and already moving down that stream was a great indication to investors and people looking at the stock to understand we understand the market conditions, we see the opportunities, and we're helping de-risk it from an investment perspective. So, great start. And my objective, for an investor looking at this, for institutional investors, I get it. You're looking for greater stability, greater revenue, greater earnings. You're looking for all the other fundamentals in the type of stock trading and volume. I get it. But we're certainly something to pay attention to brokers and to institutional. We're on our path. We're laying out what that path is. We're laying out, and there'll be more announcements to come. And so I do think that they should be looking at this and understanding we're a good investment, a solid investment to understand that, where we're heading in this marketplace. Climate change isn't stopping because of, a war in Russia and in Ukraine. It's not stopping because, there's a lot of other pressures, inflation, supply chain. It's not helping climate change. Climate change isn't going to go away and say, hey, let's take a 2-year hiatus until we can pick it up again. So we're certainly on the side of an industry that has to move. And I think as market conditions improve and people start looking again at small cap and what opportunities really understand how to get there, will be a big significant piece of that. So I do agree, and I do believe if you look at us, it's really understanding we've laid out where we're going to go. This is how we're going to get there. And as the pieces start falling in, as we continue to deliver on meeting our our milestones in the fuel cell, we start to continue to deliver on, new agreements, new projects, new, acquisitions that are consistent with what we're telling the market we're going to do. I think that will be the indicator. And anywhere along the way, people with their different risk threshold will understand now might be a good time to jump in. That's all we can really do, is make sure we put our best foot forward, explain to the market what it is we're trying to do. And when the market's ready, we're different. We've de-risked it. We found a way to take advantage of the opportunities, the spread between how the current industry does it and what we're going to do it for. And I'll tell you, if there's one area, if you look out and what we've figured out is, it really is power to the people who will benefit, the people who will get hurt the most. This is interesting. As climate change plays out and there's this energy transition, it can't be that at the end of the day, when we're now delivering net zero and a low carbon society going forward, that the average consumer, didn't get their fair share of the reduction of the affordability of that. We're making sure that happens. So we're on the right side of this. We've aligned it properly with the downstream customers, the organizations who benefit from delivering this to customers, and then our investors. So I think it's watch us, pay close attention, and when you think you're at a good point to get back in the market and really ride this thing out, we're pretty excited to bring in as many new shareholders as we can.
Yeah. Well, Frank, I would say, there's no doubts in my mind that the entire climate transition market is an enormous market, and it lost a little bit of steam, but that's just a perception. It lost a little bit of steam in the media, in people talking about it because of some other geopolitical developments around us. But I see it there, and I see it re-emerging, and I see concerns, coming up again, and the pressure is going to build up, and there's going to be lots of dollars invested also by governments around the world to help it and support it. So the market is there. I think you're in that market. You have a very interesting offering with two components to it. One that is really focusing on new technology, the other one focusing on, generating, that's the way that I look at it, but generating revenue and making your organization truly sustainable. And to your point, I think investors have a look at your organization, analyze it, look at where the price is now, look at what the opportunity is. And I always say the same thing, and you said that too, Frank, look at the facts, look at the milestones, look at how the organization is executing upon its plan and how it is achieving what it sets forth as milestones in the future. I think those are the elements to look at, and then when you take that into consideration and you build indeed that confidence that this keeps ticking as it's committed, well, then it's really worth a deep dive. But get the basics now, because the market is enormous, and that market is going to be very active and live in the next, let's be clear, we are in 2022, in the next 30 years and beyond. But there are some targets that we need to achieve. Frank, all I can say is a very big thank you for joining us today, and particularly sharing your insights, and also for your candor when you talked about the market and the stock price and how to look at it. I think that is a very straightforward, to the point approach and information that you shared with us. And I would say, on behalf of all the participants in the audience, a big thank you for that. And I can tell you that we are looking forward for the next news, for the next developments in your organization in the weeks, months, and years to come.